Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's look at some of the stocks on the move today in Europe. I'm Caroline Hepker with Lizzie Burden, and we're joined by Bloomberg reporter Chloe Millay. The defence stock rally here in Europe, BAE Systems, one of the big winners. What is prompting what is a very significant surge?
It's all about Trump. So Trump said that he wanted to increase the US military budget, and it's not a small boost that he's requesting. He's requesting an increase of more than 50% in annual defense spending for 2027. And he said that that would be paid for by the tariff revenue that was accumulated over the last year. And so this is something that really boosted Asian defense stocks. And now we are seeing the same with the European names as well. And BAE is really driving that rally. This is a company that generates almost half of its revenue in the US, so it is much more exposed than some of those other defense names. And we also know, of course, that Trump has previously been a little bit more warm to the UK than he has been to continental Europe, so that might play into that as well. But we're really seeing positive movements across the board. We have Rheinmetall also up, Leonardo also up. All of those defense names definitely in the green today. It's also worth noting, of course, that the continued heightened geopolitical tensions that we've got with the Venezuela situation still unfolding is also really helpful for that defense trade. So that's another boost.
Look, I think it's worth saying that there are big caveats, aren't there, around President Trump and that request that Congress increase the Pentagon's budget by this enormous amount. I'm thinking about the numbers. The US already spends almost $1 trillion on defence. For the UK, it's about 60 billion. And versus China with its military, then they're not thought to spend anywhere near what the US does. So I think globally, the number is absolutely huge, isn't it, that we're thinking about? Anyway, that was on my mind, Lizzie.
No, it's really helpful perspective. Let's get back to the individual stocks. The Swiss-French recruitment company Adecco, Chloe, is facing a drop this morning. What does that tell us about the broader labour market trends?
Well, the business of recruitment isn't the best business to be in, perhaps at the moment, given that we're in quite a tight labour market. Companies are hesitant to spend, and candidates are also hesitant to move jobs as well. And so Jefferies analysts downgraded 3 names in that recruitment sector in Europe this morning. So Randstad, Hayes and Adecco in particular. And Adecco was the one that moved the lowest this morning, but all 3 were weaker. So analysts said that those recruiters are facing a really cloudy outlook in 2026, and that they'll be facing both cyclical headwinds, and that will be exacerbated by new structural challenges, and that should really keep a lid on earnings this year. So this is not great news for a sector that's already had a tough 2025, a tough 2024. There'll be certainly even more pressure going forward, and AI is also another big threat. First of all, because of the impact on the labour market itself, but also because it could make the need for recruiters as an intermediary a bit more redundant as well. So definitely want to keep an eye on.
Okay. Now, we've had a number of reports out for UK businesses. There's a profit warning too from AB Foods today. Why, and how are the markets reacting to that?
Well, AB Foods shares are down quite a lot this morning on the back of that profit warning. So AB Foods consists of Primark, but then also a range of food businesses, including brands like Ryvita crackers, Kingsmill bread, etc. And it said this morning that kind of everything was weak, but Primark in particular is struggling in continental Europe and in the US. It's doing a little bit better in the UK, but definitely not as well as we could have expected after we saw the numbers from Next earlier this week. It seems that perhaps that really good performance from Next wasn't as indicative of a broader health of the UK high street as we might have hoped. And the profit warning also comes at a really pivotal time for AB Foods. It announced that it was considering splitting Primark from the rest of that business last year, and that decision is expected to be coming in the next few months by April. So let's keep an eye on that as well, with that news of the profit warning in mind as well.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.